I'm curious as to
Morning.
your feeling about how dangerous this September is. Tom and I were just talking about all the cross currents going on. And you got John Williams, the San Francisco Fed president, today in the Wall Street Journal saying he's not even sure they want to raise rates once this year. How do you evaluate what's going on in the world and the threat to the U.S. and global economies?
I think that's a great point. If you were just focused solely on the U.S. data, I think the Fed would certainly be hiking in September. Unemployment's 5.1. Growth is above trend. Stan Fisher says there's good reason to think inflation will rise towards target. So if they don't hike in September, it's going to be because of global developments. Obviously, the turmoil in China, global equity markets, global slowdown in terms of economic activity, and that tightening of financial conditions that you referred to through a stronger dollar. So this is a Fed that is certainly focused on the impact that the global economy is having on the U.S. I think they're nervous. Potentially about hiking in the face of a turbulent equity market. I would point out, however, that a danger of this strategy is that you get into a situation where if the data is weak, they don't hike, and if the data is strong but stocks sell off, they don't hike. And so at some point, I think they may have to break through this knot, but it may not be September.
Well, would you be nervous about the global economy if you were sitting in the room around the mahogany table at 20th and C Streets?
Well, that's a good point. I think I would observe that the global economy is slowing, that China is having a difficult issue with this transition. But I think on balance, as I think Stan Fisher said in an interview recently, you're never going to have enough data. There's always going to be a reason to put it off. And so I guess if I were there at this point, I would probably be in favor of getting the hiking cycle started. Yeah.
Richard Clarida with us with Pimco. We welcome all of you on television worldwide. Michael McKee and Tom Keene, Bloomberg Surveillance. This morning, Coast to Coast, we're brought to you by Cohn Resnick, Accounting, Tax Advisory, and the affordable housing industry. Your business needs transformative advice from the industry-leading experts at Cohn Resnick. Find out why at cohnresnick.com. Again, on radio and TV worldwide with Richard Clarida, an important way to get the week started. Professor Clarida, is the global economy in recession? I know that's not a negative GDP, but is there enough Lagardian mediocre where you can say it's a recessive world economy?
No, I wouldn't say that, Tom. In fact, if anything, I think you've got better prospects for pickup in growth in Europe as well as the U.S., and obviously that's a big chunk of the global economy there. China is slowing. Maybe it feels like a recession in China, but they're probably going to grow something like 6% this year. So no, I wouldn't say the global economy is in a recession, but we've moved away from that comforting myth 5 or 6 years ago that you had a two-speed world of rapid EM growth and slow developed growth, and now it's much more of a multi-speed world.
Okay, within a multi-speed world, what I don't understand is there's a debate, should they raise rates or not raise rates? Why can't there be a middle ground, which is we're going to get off the zero bound, we're going to wait for more information, we're not going to begin a trajectory or a vector, whatever you want to call it. Why can't they find that middle ground? Why is that so hard?
Tom, I think that's an excellent point, and I think this is the risk of what Yellen has called her data-dependent monetary policy. As I wrote recently, that data dependence is not a monetary policy. At some point, a policy is about how you react to data, and so far they've really not provided us with that guidance, and I absolutely think you're right. I think it would be possible to have an initial rate hike along with a communication about the conditions that would support future hikes that would go a long way to getting us out of this catch-22 situation.
So they could raise in September, but explain we're one and done, and that would satisfy the markets?
Well, I wouldn't recommend, and I certainly wouldn't think I would say I'm one and done, but what I would give is much more guidance about their reaction function as they'll respond to inflation, the impacts of the strong dollar, so on and so forth. And all we know right now is that they're looking at a lot of data, and that really doesn't help very much.
Professor Clarida, I want to rip up the script. I put you and Adam Posen as two of our smartest people in America on the Germanic experience. Richard Clarida on the present refugees and migrant debate within Europe, the size of it, as Richard Haas has told us, the scale of that migration and refugee moment. How has Merkel responded and Germany responded?
Well, obviously, I think Merkel has shown real courage and leadership on this issue. Certainly, I'm not is plugged into the details, but it's obviously an enormous humanitarian crisis, and there's a lot of, not in my backyard mentality in these countries. And Merkel is basically saying, no, we collectively as Europe have to have a plan and have to have the ability to absorb this flow. And so she deserves, I think, remarkably high marks for that. Absolutely.
Is there an economic or market impact to this that the rest of the world has to worry about, or just in general terms, how the EU holds together?
I don't think there's a direct impact. The direct impact, of course, is the crisis in the Middle East, and we're all aware of that geopolitical uncertainty. And so this is one of the horrific collateral consequences of this turmoil in the Middle East, is this refugee problem. So no, I really wouldn't view this so much in economic terms as just, an awful humanitarian crisis.